Hello and welcome, What the Finance, to another episode of the What the Finance podcast, where we talk to experts to help gain a greater understanding about what is happening in the world of finance, investing, and markets. So, on today's podcast, I'm happy to welcome Grant Williams, who's an experienced investor who is the author of the newsletter Things That Make You Go, and co-founder of the Real Vision Group. So, Grant, thanks for joining the podcast today.
Hi, Anthony. Thanks for having me, mate. It's good to see you.
No problem. Good to see you too, and good to have you. So my first question, it's going to be a bit of a big one, but there's been much talk over the past few years, and I guess especially recently, about the future secular trends that the world will experience. And, from my understanding, there's sort of two different camps that people think will happen. So first is the COVID pandemic. It's accelerated a new inflationary regime, which will be influenced by demographics, geopolitics, deglobalization, the green economy, etc. And I guess there's another one that thinks, we're probably heading towards a recession. We might experience deflation. And then from there, once we recover, it might sort of go back to what we were experiencing 2019, low interest rates, high growth, etc. So I'm sure you've probably thought about this a lot. Are you in any of those camps, or maybe do you have your own completely different idea?
Look, I've said this before, but I think the answer is both. I think both camps are right. It's the sequencing that's so important to get right. Demographics is a big wave that you can't really fight against, and the numbers are there for all to see. And it's not something that central banks can fix, for example. But right now, this inflation is way more than transitory. So we're going to get inflation in the short term. It's here. It's painful. It's sticky. There are plenty of signs that the economy could go into recession, which normally means kind of we get this deflationary pulse, and certainly starting to see that in commodities, except energy. And that energy component is likely to be something that keeps the inflation numbers elevated, as is food inputs. So you've got the absolute nightmare for central banks. You've got the things that they can't print are going up and are staying up. And they've got a troubling slowdown potentially in the economy to face, and so they're reaping the whirlwind now. And I don't feel an awful lot of sympathy for them, to be honest. They had plenty of time to try and get out of this, and they blinked in the face of falling markets, which are in irrelevance in many ways. So it's a bit of a cop-out answer to say both, but I think that's the truth. Inflation is here. Deflation is a very strong pulse, but I think this inflationary burst may last a little longer than people suspect.
Yeah, I guess my concern, as you said, a lot of the time they've taken the easy way out. And I guess governments as well, you could say, especially recently with fiscal policy, what they've done, etc. You could say especially during COVID, it was needed. Maybe afterwards, not as much. Do you feel like they'll continue to do that? They probably won't make the right decisions until basically their actions don't make any, like they don't actually influence the markets, and the markets will just do what they have to do. If that makes sense.
Well, look, they won't make right decisions because they can't, right? They can't make proactive decisions. That's really the problem with the whole gig for them. They're going to be out there and they're going to be fighting the last battle. They're not going to raise rates when they should, because you have to get ahead of things. They're not going to cut rates when they should, because inflation's out the bottle. So, it's frustrating because we've watched what they've done for a decade and a half now, and there's been plenty of people banging on drums saying you need to start raising rates, and they didn't, and they kind of took a run at it late 2018 and blinked very quickly. And it's just frustrating because at the end of the day, there's short-term pain that would have been way less problematic than what we're seeing now in terms of the man in the street and the bills he can't afford to pay. So these guys, are charged with maintaining monetary policy. They have their models. They stick to their models. They believe their models. What's the old saying? Who are you going to believe? Your own lying eyes or the models? And so they're just in a world of pain right now, but it's pain of their own creation. So they're never going to make the right decisions because they can't, and that's part of the gig, unfortunately.
I guess you see, because you could say now that they're potentially making the right decisions. I guess that's there's an argument there, but could you see potentially? Because I know Liz Truss mentioned how she wanted to take away the power of the central banks. I'm sure that's probably something that, especially when things start to get worse and worse, I'm sure some government people are going to mention that. Do you think that could happen, or is that a very extreme case?
Look, everything's cyclical, right? And it's funny how nobody wanted to take away the power of the central banks when they just kept cutting rates, because it obviously suited governments. It suited them to have falling rates. It suited them to have all this stuff going on. So look, politicians are going to be politicians, right? And they're going to say whatever the thing is they think will get them the most credibility, the most votes, whatever point in the cycle they're at. But it was inevitable that at some point central bank independence, you could argue whether they've been truly independent for a long, long time now, but there was always going to be a moment where fingers started getting pointed at central banks as being the source of the problem. And who better to fix that than the government, which is absolute lunacy, but that's not to say it won't happen. And as I say, of course, now that the central banks are in a position where they can't do politician-friendly policies for the short term, of course, we're starting to see them being questioned. We saw it immediately in Australia a few months ago that the independent review of the central bank was put in place. We're going to see it everywhere. We're going to see it in Europe. We're going to see it in America. We'll see it in the UK. Japan seems to have skated by for now, but no doubt that will happen at some point when Kuroda-san is found to be in a prison of his own design. So it's a real shame, but all this stuff is so horribly predictable because you've just got to figure out what central banks and politicians are going to do. And politicians are going to do anything they can to get elected. And once they're elected, they're going to do anything they can to stay elected. That's it, period. And the central bankers are going to do whatever they think is going to give the smoothest ride in the short term. They will never, ever take proactive pain for the economy because it's been proven to be a crazy thing to do. It was Paul Volcker came in and did it ex post and tightened rates after the cat was out the bag, and at the time was absolutely pilloried. His legacy has stood up incredibly well to the test of time, but at the time he was public enemy number one, and Jay Powell and Janet Yellen before him and Ben Bernanke before him, none of them wanted to be public enemy number one. So they're always going to take the easy way out. It's human nature.
Yeah, exactly. It's concerning to think. So, I think last week we saw the UK bond market basically collapse, and we saw the outfall from that. Do you see that potentially happening for other markets where it just gets to the point where, people lose faith in these governments, more faith than they already have, I guess, and the central banks?
Well, you've hit the nail on the head. Faith. This is all about faith now, right? It's about faith in central banks. It's about faith in governments, and thus far, that faith has been rewarded because of what we've spoken about already. Because if you had faith that the central bank would ride to the rescue, they have. If you had faith that the government would give you a stimulus check when you needed it, they have. So that faith has been rewarded, but it doesn't take much to shatter it. And I think from an investor standpoint, the credibility of the central banks is wobbling dramatically, and the recent events in the UK showcased that pretty plainly. The last time we saw anything like this was 92, when the pound was forced out of the ERM, when the markets, namely George Soros, punched the Bank of England on the nose. They're not above that. They're not above getting hurt. They're not above getting blooded. And so that faith component that you talked about is right now is the whole ballgame. That's what all this is now built upon. If markets maintain their faith in central banks, maybe they can find some way out of this. I doubt it, because what they need to do to maintain the faith goes against what they need to do with interest rates. So it's going to be a very tricky thing for them to navigate. And politicians are running out of room to promise and spend. Their faith has always been, here's some more free money. But with the finances of the UK in the spotlight recently, but they're no better or worse than any of these other countries. In fact, you could argue that the US is in way worse fiscal shape. But it just hasn't mattered because they've got the dollar, and everyone needs dollars right now. So we're at a real turning point, I think. We're at a turning point in terms of the inflation-deflation situation. We're at a turning point in this faith in the authorities, and we're at a turning point in terms of the public and what they're willing to stomach, despite being told how great everything is and how strong the economy is and how well everything's growing and how inflation's only 2% and how things are going to moderate. You can feel that elastic band getting stretched to the point of snapping. So this this next 6 months to a year, I think is going to be seismic in terms of the disruption that we see right across all those three parts of the spectrum.
And so, in your opinion, what do you think will happen?
Well, look, the central banks will try to get rates as high as they can without breaking anything, which is why I think you're seeing these 75 basis point hikes. The more of those they can get in without breaking something, the better for them, because it gives them more room to cut. They've done a pretty good job of that so far, I have to say. But we've seen the bond market reprice dramatically already. We haven't seen that in equities. So I think there's still a fall to come in the equity markets. Governments are on a wing and a prayer now because they all need someone to buy their debt. And I suspect that where we're going with this is the central banks will be forced to pivot. They'll be forced to monetize the debt. And then you're going to see all these currencies get shelled against gold, against wine, against anything real, commodities. Anything real is going to catch a bid, and everything fiat is going to be, what did Voltaire say? All fiat money trades its intrinsic value, which is zero eventually. So that's what I think will happen. The timing, I just don't know. Some very smart friends of mine, Felix Ulaf being one that springs to mind immediately, thinks we're going to have a bounce into 2024. I don't see where that's coming from, but I know better than to disagree with Felix. He's a way smarter man than I'll ever be. And then he thinks the major collapse happens in 2025. But of course, that could easily be brought forward, just depending on how these things play out. So, Felix's roadmap is, we kind of hold the lows we've made in around here. We rally through 2024, and then the big fall comes in 2025. That's something that he's laid out, and it's followed that analog very, very well so far. But things seem to be picking up speed now, so I'm not so sure we'll get that long to figure this out.
Yeah, I guess my challenge with hypotheses like that is that, if you look at the past 20 years, even I guess after 08 as well, it's just hobbled along, and basically they've done whatever they can to make sure this system remains as it is, because I guess the benefits for them, you could say incentives, financialization, etc. So I guess it's that challenge that it's continued to go despite what's happened, but I guess you're saying that it's just got to the point where it can't go any further. And I guess that's what Felix thinks as well.
What's happened is and if you think about it, if you break down what they've done the same thing every time, right? They've cut rates to the bone, and then when that wasn't going to get it done, they started QE, and then since then they've just thrown QE at everything, and now we're at the point where if QE doesn't work, and they're overwhelmed by sellers of bonds who will give them way more to buy than they can handle, what happens then, right? And the tools left, and this is the kind of worrying part, and Russell Napier's talked brilliantly about this, the tools that are left to them if that happens are basically different variations of financial repression. It's capital controls, it's credit controls, it's mandatory government bond buying, it's all the things that we've kind of read about from the 50s, post-World War II, and assumed it could never happen here today because this is a free market economy and we're not, at the end of the Second World War. That was never the point. The point is human fallibility and poor decision making on the part of people that don't want to face the music leads us inevitably to the place where the rubber meets the road, and they have to start putting rules in place that give them the outcome they want, regardless of how fair or how sensible they may be.
Yeah, and I guess if you think about the main people who own these bonds, we saw it last week in the UK. I think they were talking about pension funds, and I guess there's a lot of these, I guess, people who are about to retire who are very reliant on the bonds that are held within those pension funds and I guess other organizations. So the government's going to do whatever they can to make sure that they retain their value.
Yeah, they will. I mean, again, it's a short-term phenomenon. They won't let it happen the first time, but who knows, right? And then you get back into, you just fuel this inequality divide. Why should the boomers get bailed out? You can't afford to bail out Gen X pensions. You can't afford to bail out millennial pensions. And the answer will be, well, no, give them time; they'll come around and they'll be okay. But again, you're just at this point where you're making different rules for different parts of society. And up until now, as I said before, that's been tolerated. But now we're at the point where if the difference between the haves and the have-nots is not being able to eat or heat their homes, it's very different to the difference between the two groups being, one sees the value of their art collection go up and the other one doesn't, right? It's totally different. So we're in a very different phase of that particular part of the cycle, and it's going to be incredibly difficult to put any policies in place now that benefit the wealthy, as should be the case. It's Labour's turn. Capital has had a field day for decades now. It's Labour's turn, and the sooner the politicians realise this, the sooner they can start creating policies that even that playing field out. But what that means ultimately is a transfer of wealth from the rich to the poor, and that will happen by asset prices falling and people being able to afford houses they couldn't afford before. Just to give one example, and that's really the way this has to go.
If we look at maybe one of the influences to the inflation, I guess the challenges we're experiencing at the moment, Ukraine-Russia conflict, obviously Russia invading the Ukraine. Are you seeing that it feels like there's more, I guess, conflict in the world? Obviously, not just that, but you look at the US's reaction to Saudi Arabia and OPEC Plus recently, and how they're saying that they're siding with Russia. Do you feel like there's more of this conflict, not just, I guess, actual conflict, but more of this psychological conflict between East versus West, and I guess, us versus them?
Look, for sure. But that stems from the fact that everybody's in a bad way right now. Their finances are in a bad way. Their demographics are mostly in a bad way. Their societies are in a bad way. This is not a fun time. This is not a fun time to be any kind of policymaker, because all the sins of the past multiple decades, 5, 6, 7 decades, are all coming home to roost now. And so you've got to try and make policies that will get you through that, but it really is survival time. And so when you're trying to survive, anything that doesn't align with your outcomes can be deemed enemy action. That's why you're seeing all this conflict. That's why you're seeing fingers being pointed at OPEC. They've cut supply before. It was never said they were siding with Russia. They've got their own domestic problems to sort out. They're cutting production because they need the price up. Because guess what? They've got people they have to take care of it domestically, and we've had decades of cooperation and tailwinds and globalization. That's reversing. It's as simple as that. And when that reverses, domestic politics always trumps international politics. That's the way it's always been. No leader is going to put the global economy ahead of his own populace, because guess who votes for him? The citizens in his own country. So you are going to see this more and more until there's been some kind of clean out, some kind of leveling of the playing field. And to me, that means borrowers take some pain at the expense of savers with interest rates going up. The rich takes some pain at the expense of the poor, whereas as asset prices come down to more affordable levels. That's just the way it has to go, and it's going to happen on its own, or it can be forced. And frankly, the quicker we get this over with, the better. But the longer you try and postpone this, the worse it's going to get, and the more angry the disenfranchised are going to become, and the more conflict you're going to see. So that it's a self-feeding loop that you've identified there that won't stop until the playing field has been leveled, or at least people feel like there's a genuine attempt being made to level the playing field. And I don't think anybody feels that way right now.
Exactly. And as you said, that instability, it's especially when it's other countries as well, it spreads to basically all around the world. So, I guess BRICS as well is a organization who's, I think it's China, Russia, Brazil, etc., commodities based. They're looking to bring in sort of maybe a commodities-backed reserve currency. Do you see that as maybe a solution to what you mentioned before, where fiat currencies really devalue?
Yeah, look, I've talked about this before, and I actually did a presentation on this called Cry Wolf back in 2018, crikey, 4 years ago. And what I suggested there was that at some point the financial system will reach the point we're at now, where it's going to fragment, and at that point, gold will be reintroduced. Now, that's not to say we're going to go back onto a gold standard, but if you're going to stabilize a financial system, you need a neutral reserve asset, and that will be gold. All the central banks will go back to gold. Gold will be put at the center of the financial ecosystem once more to try and stabilize and get everything priced off that to calm everything down. And they will work as quickly as they can to remove gold from the system, because it's such a fantastic handbrake on politicians and central banks writing unbacked checks. So, you know, if the BRICS nations, if China and Russia and Turkey, India, Brazil, all these countries do start to decide that the West is reeling, which it is, and particularly what we've seen in the energy markets, people are starting to realize that the only real reserve currency is energy. If you have it, you have a massive advantage. And so all the countries that have been digging things out of the ground and selling them might start to think quite seriously about digging things out of the ground and creating a basket that is priced off them, because it will do them no harm. And I think that's the way we're headed. Now, how quickly it happens, or even if it happens, is unknowable. But if you look at the problems facing East and West, it's a very sensible solution for the weaker half of that. And even though you could argue that Western economies are every bit as weak as their Eastern counterparts, there's still this projection of power from the West, because they do run the financial system. They do have the dollar backing it. They do tend to be at the heart of everything that goes on in financial markets. But the East has all the things that people need now. And so I think we are going to see a move towards doing this. We're seeing it away from the headlines, away from the front pages. We have been for a number of years now. You know, my friend Luke Gromman has chronicled this brilliantly for a number of years. It's all happening. You know, payment rails are being put in place and bilateral agreements are being signed, and you are creating this group of people who at some point are likely to say, okay, we are going to launch our own parallel financial system. You're welcome to be involved. We're not going to exclude anybody. But if you want to trade with us, and if you want to be a part of this financial system, the dollar is not the king. You know, we're going to have a Bancor type currency that will be based off a basket of commodities and gold and whatever else. And this is how we're going to function. If you don't want to be a part of it, that's absolutely fine. But you're going to struggle to trade with more than half the population of the planet, and that makes things tricky. So we're in for an awful lot of change, and it's the kind of change that people struggle to get their heads around, because it only really happens once in a lifetime, if that, if not once in 2 or 3 lifetimes. And normally these are things you read about, and you can read about them all you want, but if you don't experience them, they're just abstract. We're living through history now, and we're going to see things that we've read about in textbooks and history books, and they're going to look an awful lot different up close than they do jumping off the page at you.
So I guess, do you think the West will sort of go be very aggressive against and sanction a system like that, similar to what they've done with Russia? And I guess, do you also think that maybe some of those countries would be uninvestable?
Define uninvestable. You know, I mean, uninvestable to who? The US will sanction, because that's what they do. But as we've seen, you know, I think the sanctioning of the Russian central bank was a catastrophic error on their part, I have to say. I think that has now made every central bank in the world question what the future might hold for them if they disagree with the US policy at some sort. Can they be sanctioned? So yes, they will try and sanction, but that's the beauty of having an alternative payment system set up. If you're China and you're Russia and you want to transact in energy, the sanctions won't hurt you. You just do it between yourselves. You bring in India, you bring in the Saudis. There are plenty of countries. Fine, it may not be the US, but look at Europe. Europe needs energy, period. And there's a time when the US can send them energy, which they're doing now. That won't last forever. And ultimately, Europe is all dependent upon energy coming from their east, and that's an enormous piece of leverage that Putin ostensibly has, but also this new trading bloc. You know, if you get the Saudis involved in that, and you get Russia involved in it and you get China involved in it and India, you can't just ignore that, right? It's just not something you can say, it doesn't matter. It's nonsense. It does matter and it will matter. So again, this is just another sign that we're at a period where we're going to see immense change, and powers that we're not used to seeing dominate global politics and global financial systems are in the ascendancy now. And that's not to say the US is doomed or Europe is doomed, but it is to say that the countries that were seen of as kind of second-tier citizens are going to be much more vociferous about demanding a bigger slice of the pie or a seat at the grown-up table, and that's happening now, and it's going to continue to happen, I think.
Yeah, and you're just not going to be not just going to say no. You're going to have to either let them in.
You can't just say no. It's just they're just too big. They're just too big to ignore.
Yeah, exactly. Which is a crazy time ahead. So I remember listening to one of your interviews, I think, where you were interviewing Anthony Deaton. I don't think I pronounced that correctly, and it really stuck with me. And I guess he's probably one of those investors who's more, I guess, traditional value investing, is investing in these companies that are more physical. So you mentioned before gold and some of those other assets. Do you see maybe manufacturers and I guess more the traditional value companies as well, maybe benefiting from what we might experience?
Well, it's a tough one, right? Because at the same time, manufacturers might benefit. They're also going to be given a kind of split on a political basis, reshoring a lot of their outsourced manufacturing, which is going to put their costs up dramatically. So it's not quite that straightforward. What I think is going to be very interesting is a potential end to everybody's fixation with the stock market. There are hundreds of thousands of companies that aren't listed that are great investments if you can buy into private companies, not with the sole aim of listing them and getting an exit that way, but producing cash flow. Like businesses are supposed to invest in a business and have it pay you dividends every year. And so I think that, to me, is more likely what we're going to see is wealthy investors who say that I don't want to get caught up in the stock market. I want to invest in businesses that are doing great things. They either are listed and they're very tightly held, or they're unlisted, and I can invest in them as a partner in the business. And this is very much Tony's philosophy. We spoke to it in the interview I think you're referring to. That, I suspect, is going to come back into fashion because there are going to be plenty of superb businesses that get caught up in a stock market crash and end up being sold incredibly cheaply. Now, that's great if you're an investor with cash and a strong stomach. You can buy companies that are phenomenal businesses cheap when everybody panics and just hold on to them. And that's the way it should be. But this idea that we're going to start a company, we're going to rush it to IPO, we're going to get out, we're going to list it, and then everyone's going to want to buy this company. I just think that being the kind of default position for everyone, again, is going to change. I think people will be looking to invest away from markets that get whipsawed around based on central bank decisions, inflation news, et cetera, et cetera. Despite what's happening in equity markets recently, if you're a guy with a chain of 25 dry cleaners, you're not bothered what the Dow Jones is doing. You might be bothered what's happening to your customers in terms of their disposable income and how they might be showing up. But that's a business problem. That's a business decision to have. You're not seeing your net worth evaporate because a bunch of retail traders have decided that they no longer want to play with your sector. So change is everywhere, and I think that's the one constant now we can rely on is change. Whichever part of this crazy puzzle we all like to spend our days figuring out you look at, it's going to change. I don't think anything is going to stay the same.
Yeah, which is crazy to think. So I guess, do you think that would maybe build like a bit more of a wealth divide? Because you said there that I guess the only people who are going to be able to access that are probably wealthy investors. Or do you think maybe
not necessarily? I mean, look, if you're someone who saved up 20 grand and you think to yourself, right, I want to invest my 20 grand. Well, you know what? You could go and put it in an ETF, or you could find, let's stick to our dry cleaning. You could find a local dry cleaning business who's looking to raise some money, some capital, and become a partner in a real business, not a piece of paper that's or a number that's quoted on a screen every day, but a living, breathing partner in a business. And I think that is something that you don't have to be super rich to do. You know, I've got a very good friend of mine who did just this 20 odd years ago. Bought, you know, he left his job, was paid out, and had some money, invested it in a business, became a partner in the business, and helped grow that business to the point where he sold it for you know, a really good amount of money. But he was a businessman. He didn't look at the stock price every day. He looked at the price of his inventory. He looked at his customers and looked at his margins and did all the kind of things that you're supposed to do. And he ended up building a great business. And he went through recessions, and he went through booms, and he went through busts, and all the different parts of the cycle. But his share price wasn't moving around every day, and he wasn't getting people writing articles about it. He just got on with it. And so I think a lot of people are going to look to do that. And, you know, starting a business of your own has never been easier. So, you know, I would like to hope that there will be a wave of entrepreneurship that comes out of this, that isn't funded by free zero cost capital, and does need to make a profit in order to survive. What a fantastic world that would be, to see thousands of people starting businesses that are profitable, maybe not massively so, but real businesses that do have the opportunity to grow, and if they can ride out tough times, have the opportunity to prosper. So, you know, for me, it's not all bad at all. The things that are happening right now, and the screaming headlines, are very much written from a financialization perspective, from a markets perspective. In the real world, opportunities are still everywhere.
Yeah, and I think when you mention stuff like that, it's also making sure companies can survive when these challenges happen. Because I guess what we've seen is, especially the big companies that have just levered to the teeth, they try to reward themselves as much as they can, and then if shit hits the fan, then they hope the government bails them out. But it's actually moving away from that, I guess, to them maybe having more cash on hand in case this stuff happens, like I guess most individuals have to have.
Yeah, for sure.
Yeah, definitely. So do you sort of link crypto into those, I guess, low value or like those high growth opportunities that have made lots of money recently, but you think are potentially going to suffer? Or
you're gonna lose at least half your audience here, because I just don't care about crypto. I'm sorry, I can't find a way to care about it. I wish everybody the best. I wish everyone who's long the best. I wish everyone who's short the best. I just can't care about it. You know, I looked at it. I understand from a philosophical standpoint what it's there to do, and I, you know, as someone who believes in gold and would class himself as a libertarian, I understand it, and I'm right behind it. But it became something completely different to that. It just became about the number going up, and that lost me, because I just don't care. And I realized that if I want to care, I'm going to have to devote an awful lot of my time and my life to something that I just don't care about. So, you know, as I said, I'm totally agnostic. I have really bad feelings about some of these stable coins. I think Tether is a complete fraud. What happens if that goes to the wall in the crypto markets, I don't know. I've got dear friends who've lost life savings in Luna and things like that. You know, I haven't seen that many people get rich and stay rich with Bitcoin. I haven't seen many people cash out at 60,000 and, you know, go and buy that yacht and that big house in the countryside and just enjoy it. I see idealism. I see it get caught up in this cult-like situation, and it's just I just don't care. So, you know, as I say, I don't wish the Bitcoin guys ill. I hope they all get rich, and I hope the shorts get rich. I just can't care. I'm sorry.
Yeah, no, definitely makes sense. So, Grant, thank you so much for your time today. I really appreciate it. I guess my last question is, what is one message you want people to take away from our conversation?
Oh, good question. That okay. What's one message to take away? Change. Be prepared for change, and be prepared to think through the kind of changes that 10 years ago you would have said, well, that will never happen. Because right now, I think everything's up for grabs. So open your horizons, in terms of what kind of change you can get comfortable with, and don't rule anything out. Think everything through. It's fine if you do the thinking to say, no, I don't think that's going to happen. But if someone says, I think X is going to happen, don't say no chance, because right now everything's up for grabs.
Yeah, definitely. So much is occurring. I think that's a great message to take away. So Grant, thanks again. So I know there's lots of interviews that you've done online. We mentioned your newsletter. Is there anywhere else people can find your work?
Look, the easiest way is just grant-williams.com. Everything that I've done is there. So it's pretty straightforward.
Yeah, easy access. All right. I'll put that in the description. So Grant, thanks again.
All right, mate. A great pleasure. Thanks, Anthony.
Thank you so much for listening. And if you enjoyed the episode, please subscribe and click the bell icon so you are notified when new podcasts are released. I hope you're leaving with some great value about investing, trading, and finance. See you on the next show.